Hey guys, what is up and welcome to a new Tesla update video. So let's go over Tesla, let's go over what happened today, what's happening in the market. And yeah, tomorrow is a pretty big day for Tesla stock. Earnings coming up after the bell tomorrow. So I'll give you my thoughts, what we can potentially expect tomorrow, and of course post earnings. I'll give you my levels and what I'm looking for, etc. So yeah, if you enjoy, don't forget to hit that like button. It would help a lot. This is not financial advice. I'm not a financial advisor. However, if you enjoy my technical analysis and you want my thoughts and updates as the market is trading every single day throughout the actual trading day, well, that link is down below where I'm constantly sharing my post thoughts, updates, mainly on Tesla stocks, sometimes other stocks as well. Today I talked about AMD, for instance, over here. If you're interested, just $3 a month. That's all it is. YouTube membership link is below in the description of the video, or the join button on my YouTube channel beside the subscribe button. So again, I'd love to have you there. Or $5 gives you access to the second tier, which also happens to include NVDA constant updates if you're interested. But jumping into it, Tesla closing the day down almost 6% on the day, closing at $227.5 per share, which, compared to the market, to be fair, Q's down 2.5%. You can argue Tesla is actually surprisingly following the Q's today, despite some FUD essentially happening over the weekend, such as they're supposedly delaying that kind of more affordable vehicle that came out on like Saturday or Sunday or something like that. So honestly, all things considered, not as bad as it could have been, in my opinion. But, there are some concerns here. So going to tomorrow, right? Tomorrow, let's talk about what we can expect going to tomorrow, right? How can tomorrow look like as we have that final move right before earnings, right? And then I'll go over what I think the kind of more larger move will be post earnings. So tomorrow, what do I see tomorrow? So Tesla, number one, on the 1 hour chart, it did unfortunately fall out to the downside of this tightening sort of wedge, if you will, right here, right? It got tighter, and instead of coming back up and getting tighter, even further, essentially, it fell out, right? So the way I look at it moving forward is this. I think tomorrow, I wouldn't be surprised if we see a bit of a green day tomorrow, right? Tomorrow, green day, let's say back up to about the mid-ish 230s, 233, 235, somewhere around this range right here. Why? Two reasons. Number one, it would essentially actually get a stronger retest of an area that, of course, right here you can see was a massive area of support, now supposedly resistance. So that'll be number one, a retest of that, which is pretty common. Number two, it would essentially reset the 1 hour time frame for the mean reversion, essentially on the 1 hour time frame, or the market bias. It will reset it, it'll come right back into it, which also happens to align around that mid 230s. And of course, the third thing is also going to be another retest. In this case, however, it'll be a retest of this trend line breakdown, which we have unfortunately seen, and we can potentially see a continuation of a move to the downside post that. Now, obviously, there's a caveat there. Earnings, it is a big question mark. I'm not going to try to tell you how it's going to go post earnings. Nobody knows, right? There's too many unknown factors at play. How good, how bad are the earnings? What did they announce on the earnings call? How do they even sound potentially? Are they positive? Are they negative sounding? How does the stock even decide to react to that? There's too many unknown factors with earnings. Nobody knows how it's going to react. But I'll give you the bigger levels to watch for post earnings regardless. So yeah, let's jump into it. So that's going to be the main levels I'll be looking at tomorrow, right? Wouldn't fully shock me to see a potential, bit of a rally again, mid to low 230s, we'll say, which will be about potentially 2 to 3% maybe tomorrow, right? Again, with the VIX sitting at, still well into the, well above 30, we're still going to get these volatile movements up and down until the VIX essentially drops down below pretty much 28 to 30. So, seeing a 3% day tomorrow, 2 to 3% day tomorrow, not unusual in this kind of market whatsoever. That's just a regular day at this point. So watch for that potential bounce tomorrow. Watch for the potential rejection around the mid to low 230s, and then we'll see from there. Technically speaking, if there was no earnings and I were to look at this strictly from a technical perspective, without a potential massive earnings catalyst looming around the corner, normally you would expect a move that looks something along the lines of this, and Tesla will most likely make its way down closer to $200 per share, potentially even seeing, sub 200, closer to 190, right? That actually becomes a very real possibility now, especially as long as we remain underneath this trend line and we do not get back above it. Now, if we get back above it, that's a different story entirely. That, for instance, could look something like this. Then this will be down here viewed as a false breakdown, and this would be actually a very bullish reversal. But that's a big if, right? I never assume those kind of ifs happen. I assume it'll play out accordingly, which in this case, unfortunately, accordingly does most likely or most often than not imply a breakdown, retest into a continuation. But again, because there is earnings, of course, tomorrow after market close, that is a big question mark. It does take technical analysis, and it kind of throws a wrench in it, right? It definitely makes it less easy, I guess, to predict, if that makes sense, from a technical perspective. So Speaking of which, though, let's talk about the tax. No, before we do that, one final thing I want to mention. A subscriber in my members section actually mentioned this. We talked about this a while ago, but I haven't brought it up in quite some time. And he brought it up, or he or she brought it up, and it kind of reminded me that, you know what, we haven't talked about this in a while. We should re-mention it one more time. So I wanted to say this. So you can argue on the weekly time frame that this up here was a massive liquidity sweep. You know, it is what it is. But the other argument is the fact that, well, I mean, it made a higher high. Ultimately, it made a higher high. Did it go higher than this? It did. It's a higher high. So that's still technically a bullish structure. Why is that important here? Because this is where the Fibonacci's come into play. If you take the overall massive swing low on the weekly and you go to the massive swing high on the weekly, take the Fibonacci's, swing low, right around here. Again, I'm not doing this to perfection. This is just a rough guideline, but nonetheless, it's close enough. And then you bring it to right around the top of the, the swing high, which was all the way up here. And you look at the fibs. And you look at the fibs. The first level was at 618 with that 272 that I like to look at, which you can see even then, on the weekly, we actually stopped by it briefly. There was a chance that we were holding it. Then we finally collapsed below it on the candle right after that. Now we've been kind of going sideways for quite some time, similar to what we did up here, just in the flipped scenario. Here we were extremely overbought, kind of going sideways, and then we fell. Here we're we're fairly oversold, to be completely honest with you, relative to the mean reversion. But the point is the fact that the MACD is looking pretty decent. And on top of that, we are setting up about that 6 sideways weekly candles in a row, the same way we did up here. Now we're doing it down here. Remember I mentioned that? That's exactly what we're doing. But the thing that's important here, and the reason I'm bringing this up with the fibs, is because we're at the next level of the fibs, right? We are at the next level of the fibs. So if I zoom in on this very quickly on the weekly time frame, you can see we actually very briefly touched that 786 Fibonacci right here. You can see just a couple weeks ago, briefly touched that on that massive sell-off and bounced very aggressively from it. However, that does not mean that the bottom is in, especially when we looked at that 1 hour chart, which is why, and this kind of goes into what I expect, or what can happen post earnings, is one more sell-off, one more potential sell-off. But the reason this is going to be an interesting one is this. So again, this Fibonacci is 786 to 826, which is sitting between 214 roughly to about $200 per share. Again, roughly, I'm not drawing to perfection here. Roughly, of course, right? That $15-ish range, we'll say. We did briefly touch it, but we never really truly got into the zone. We never really actually got into that zone. We could not, of course. Maybe we just rally post earnings. Who knows for sure? Nobody knows for sure. But it wouldn't shock me or surprise me is what I'm trying to say, that if we get an actual move down into this general Fibonacci range, again, 215 to about $200 per share, roughly, maybe even slightly peek our head into the lower or into the 19X region, like 197 or something like that, wouldn't fully shock me as well. That's getting pretty close to this weekly trend line as well. And then we find that bounce. Now, why can I potentially see this happening? A couple of reasons. Number one, it really gets, well into these Fibonacci's, gets a much cleaner entry into there, right? That's where, the big boys will be much more happy to load up. They don't want to load up here. They want to load up at discounts. So that's number one. That's number one. So that wouldn't surprise me. Number two, could be a very large liquidity sweep. Think about it, right? Think about it from a more psychological perspective, right? Everyone's looking at this and everyone's probably setting their stop losses essentially below this candle right here, which that will be about, below 214. 213, 210, right? Think about how many stop losses are there. So what if the stock does tank below that? Triggers all those stop losses, essentially causes a very large liquidity weekly sweep all the way down here. Everyone panics. Maybe even if you briefly see that like a sub 200, like 197, people really start worrying. People really start panicking. People start, getting scared, etc. And then it just sweeps, gets all those stop losses, gets all those panic sellers out, and then it reverses aggressively. The market likes to do these things, man. I've said this and I've showed many examples before if you follow my channel for quite some time on various stocks. The market likes to do these things. It likes to get these situations, kind of like what it did up here, you can even argue, right? Nice, massive move. Everyone was looking all the way up here. I'm sure all the bears had their, what's it called? Their shorts, but they probably had their stop losses, if you want, their shorts right around this liquidity sweep as it went up here. And then, of course, as they got swept and all their shorts got covered, essentially, more or less, bam, to the downside, and it makes you miss that move almost to perfection. Again, it wouldn't shock me to see something similar like that post earnings. So just, it's good to mentally be ready for that potentially. So just FYI, just be ready. That is a potential scenario. So that's going to be my main level to the downside. If, earnings, the reaction is, for whatever reason, negative, watch for a potential move down closer to 200 itself, maybe even peeking our head into the 190s. Watch for that. Oh, and if things really go bad and it's like actually pretty bad, I think closer to 170 is like the worst case scenario for me, while still maintaining some relative bullish potential because of the, for instance, even on the daily chart, that kind of green trend line closer to the 170s. That's like my worst case scenario, realistically, while still being bullish overall, zoomed out. To the upside, however, if let's say earnings is good, let's say Tesla just rockets post earnings again for whatever reason, we don't know. Maybe they give some insane guidance, maybe some crazy new announcement, whatever the case may be, we don't know. But let's say it does. The first level I'll be looking for is going to be on the 1 hour time frame. What is going to be the 1 hour time frame? The 1 hour time frame is going to be simply pretty much breaking back above the mid 230s. That's step number one. If we can break above the mid 230s, ideally closer to 240, great. That's great. That's step number one. That's what I want to see. But looking at the daily, we have two massive trend lines. One, of course, is that very large one that's been, smacking Tesla down several times. We haven't even really come up to truly retest that for quite some time. That will be the one that's sitting closer to, depending on when it happens, 280s, maybe even closer to 290, right? But we have a smaller trend line over here, you can see, which has rejected us once, twice, thrice. And that right now is currently, assuming it happens sometime post earnings, let's say on Wednesday, is currently sitting at around the mid 250s. So in other words, breaking above the mid 250s to 260. Okay, well, the first level is the 1 hour. We talked about 235 to 240. Step number one. Step number two, 255 to 260. Essentially this trend line here. And this obviously resistance all the way over here is sitting closer to 260 itself. And then step number three, if those two get broken above, would be essentially to break the overall massive red trend line over here, which again, assuming it happens, let's say by the end of this week, for instance, about $280 per share, right? And if we break above that, then I think we make our way higher and probably decently higher and potentially even start getting a rally into June, which I still believe, regardless of what happens, whether we go down first or not, I personally still believe, just my opinion, not financial advice, that Tesla will have kind of a FOMO rally, to be completely honest with you, into the robotaxi events in June. I personally believe that'll happen. That usually happens with Tesla with these kind of things. Could be a sell the news posted, of course, you never know. But it wouldn't be too surprising to see that kind of thing happen, which then also would very nicely coincide with that kind of situation I've been talking about, with that mean reversion on the weekly, right? Where I mentioned many times, you always revert to the mean, even when we got super duper, like people were, go back to this video, man. And I wish you could go back to the social post when it was around here. Everyone was so bullish. It was insane. Everyone was screaming for 600. I was probably one of the few people, and again, go back to my video saying how, there is that potential, but we're so far away from the mean reversion line that it's kind of suspicious. Like, I can't imagine it going too much higher from here because it's just going to be way too overextended. Same idea down here. We revert to the mean, and I want to revert back to the mean to the upside this time, right? Which again is sitting somewhere around that, we'll say closer to the mid 300s, which also, again, if we get that kind of rally into the event in June for robotaxis in Austin, Texas, that will line up pretty damn well for that. That's kind of my current thesis. So let's see if that plays out, but that's kind of what I got for you today. So let me know what you think. Tomorrow's a big day. Let's see how that plays out. Going into Tesla options flow, nice call flow towards the end of the day. I like to see that. A lot of put flow was coming in throughout the day in the morning, roughly, but towards the end of the day, now I'm looking at it, nice call flow coming in for tomorrow. You can see 230 strikes, 240 strikes, all for this week, I should say. But I assume that they most likely also expect a bit of a rally into earnings. Again, that mid to low 230s, it really wouldn't shock me. I have cash ticket puts. I'm just going to most likely close them if we actually do indeed get that rally. Probably get like a 30% discount on those bad boys already. Close them out, and then I'll go into earnings pretty much raw. But we'll see. But nonetheless, yeah, some nice call flow towards the end of the day, which tells me that there might be a bit of a spike tomorrow morning. We could get that spike to the mid to low 230s tomorrow. And from there, we'll have to revisit it. But I give you all my levels. I gave you what I think, even post earnings. So yeah, thanks for watching. See you tomorrow. Peace.